do our talk of the tape. Another update for stocks amid questions about how long this move can continue. Let's ask Joe Terranova. He is Virtus Investment Partners Chief Market Strategist, right here with me on set, also a CNBC contributor. So we got to wait a few minutes for Disney. We'll be on top of that. You sold out of that stock not that long ago, pretty recently. Why'd you do that?
Well, I grew impatient with the stock. I had bought the stock in early September, bought it up at around 115, unfortunately. Saw the stock decline down to 101. I'm going to be very impatient right now. I think the fundamental story of Disney is a good one, but I don't want to sit there and wait. Scott, I'd rather be in Freeport-McMoRan. I'd rather be in Corteva. I'd rather be in Albemarle. I'd rather be in a lot of these material names that are up 25, 30% on the quarter. I'm trying to create alpha. I think you have to do that in this environment. You have to be active.
You just don't want to be that exposed to more macro issues, the consumer, because it's not like the companies you mentioned don't have macro concerns if the economy slows globally.
But those companies have momentum, and momentum has never been as important to right now trading and investing than in the prior 2 years. You're talking about stocks. You talk about Disney. We all know the story's good. We know Dan Loeb's there. Dan's going to get it done. You and I both know that. But how long is it going to take? And you have to be very...
but I mean, he's not the one deciding whether, Disney Plus becomes profitable or not, right? They got to add a certain number of subs. The street's impatient about the profitability. CEO has talked more about the need to be profitable rather than the addition of, X number of subs.
Dan has the conversation going in the right direction, though. He's got a little bit of a presence on the board. He's got them talking about monetizing ESPN. We're hearing about the potential for a sports betting app. But collectively, it just brings me back to this environment. You can't be a passive investor anymore. Those days are over. You can't buy the index. You have to be active. And if you're going to be active, a lot of the stories, which are great stories, okay, those stories are not going to evolve very quickly, and I'm going to be impatient with that.
This story of Disney and the stock is interesting in and of itself for where the market is and where stocks like this have been. This stock is having its best month since December of 2020. It's in the midst of the worst year that it's had since 1974. So it speaks to where stocks have gone in the last month, the rally that we've seen. This is a stock that's down 35% year to date.
In its longer-term support zone, 90 to 95, that's where you've bought the stock on the decline. That's where the realization, the value is. But it's still trading in mid-30s from a valuation standpoint. I can make an argument if you want streaming, you might as well go over to Netflix.
So let's just spin it forward to the market itself as we wait, which we think is going to be about 90 seconds or so before we actually get the numbers and the commentary that all of you are obviously waiting for. This is a midterm March higher. And then we got
Gridlock rally.
Gridlock rally?
Gridlock rally, but let's remember it's 2022. So what can go wrong will go wrong. Middle of the day, you had the crypto news. That shook market sentiment, really, Scott, more than anything else. Market kind of shook it off. Overall, you need good behavior from the 2-year Treasury, and you also need the tax loss selling in mega caps. You need that to abate.
No, I'm glad you mentioned all of that. I mean, the dollar weakening today, rates coming down over the last few days, obviously a boost for stocks. The tax loss selling is interesting, is what Gunlock and I talked about out in Denver, which he said is one of the principal risks between now and the end of the year. You've made the point as it relates to mega caps, which you just mentioned, that the market can't do well without them.
No.
Midday today, you came in here up on the balcony and you said, don't tell me that mega caps don't matter. You looked at the internal direction of the market on an intraday basis to suggest that they matter as much as they always have.
Of course.
There's other leadership lately, but in the bigger picture, they are what they are.
Statistically, you can't get away from it. Just think about yesterday, the recovery that we witnessed in Apple, concurrent with the market recovering towards the end of the day. It's almost as if when you ask the football coach heading into the locker room for the second half, what do you need to do to win in the second half? Well, guess what we need to do? We need the Treasury market to participate. We need them to behave well, and we need the mega caps not to go up, but just to stop going down.